Then, of course, they come in on their white horse saying, well, we've got the solution. All you have to do is take your dollars from these unsafe commercial banks and just move them to the safest bank in the world, which is the Federal Reserve, which is the central bank. And people see that as, oh, that little bit, that perceived security and safety, they give up their freedom. But what they don't realize is they're doing a deal with the devil.
The Fedcoin, CBDCs, central bank digital currencies, Bitcoin, and crypto. What potential impact does this have on the average person? George Gammon, host of the Rebel Capitalist Show, begins by explaining that currently, banks, especially those outside the United States, have control over most of the money through the creation of credit, with 95% of the world's dollars being lent into existence. He further elaborates that when people deposit money into a bank, it becomes a liability of the bank, and the bank may lend it out or invest it to make a profit. George cautions that people should be concerned about CBDCs not just as a competing currency to the dollar, but as a potential shift of liability from banks to the Federal Reserve. He emphasizes that such a shift would have significant implications for freedom, liberty, free market capitalism, and privacy. George also expresses concerns about the FDIC's limited funds, with only around $200 billion in their coffers to cover over $18 trillion in deposits in the United States. He also references Jeff Schneider's concept of Eurodollars, which are dollars outside of America that are creating more money outside of America, contributing to what he sees as a looming crisis in the banking system. He worries that central planners may leverage this crisis to push for a perceived solution, such as moving money to the Federal Reserve for perceived safety, but he cautions that this could come at the cost of individual freedom and privacy. He shares his perspective as an entrepreneur who avoids paper assets and counterparty risk, citing the motto, "Cash is trash," and echoing Rich Dad Poor Dad's view that savers are losers. George emphasizes the importance of being mindful of who is in control and making informed decisions in a complex financial landscape. Before we get into the video, please like, comment, and subscribe, as this helps our small channel grow.
Thank you. So what do you know about this Fedcoin and CBDCs and Bitcoin and crypto and all this? What does it mean to the average mom and pop out there? What's going to happen?
Well, I think the first thing people need to realize is just going back to what you're saying about Bretton Woods, when you stated that the United States was then in control of the money. To a certain degree, that's true. But now I would argue it's more so the banks. The banks control the money, and more specifically, the banks outside of the United States.
Amen. That's Jeff Snyder. It's called the euro dollar and the euro yen and the euro peso and the shadow banking system. Well, but Gerald Celente doesn't call them banks. He calls them banksters.
That's a good term. But the reason I start with that is so people realize that 95% of the dollars in the world were created by lending them into existence. So most people have this idea that dollars are just kind of a green piece of paper, and you take your green pieces of paper that you digitally get with your paycheck and deposit it at the bank, and then the bank kind of puts that in a vault and stores it for you until you need it. But what they need to understand is, again, 95% of those dollars were not green pieces of paper. They were lent into existence by a bank extending credit. And therefore, those dollars are a liability of a bank. Right. So if your listeners have an account with Wells Fargo or Chase, B of A, something like that, then, and what the depositors found out very quickly with Silicon Valley Bank, by the way, is that those dollars, which they considered assets, you got $100,000 in your account, that's your asset, but that was a liability of a bank. They weren't putting it in a vault. They were actually taking your money and they were lending it out, and you just had to trust that that bank was going to pay you back. So why I want to start there is because I have really been pounding the table that the thing people should really be worried about as far as a central bank digital currency isn't necessarily a competing currency to the dollar. It's not necessarily a Fed coin or Janet Yellen coming out and saying, okay, now we're going to start using this CBDC. So whether you guys like it or not, we're just going to force you guys to use this and ban cash. But what a CBDC really is, when you look at the mechanics and the financial plumbing, it's just the individual taking their account that they now have with Wells Fargo, that's a liability of Wells Fargo, and simply moving it to the Federal Reserve. This is what we really need to push back against, assuming that you value freedom, liberty, free market capitalism, and especially your privacy. Because all those Orwellian things that we have heard of that we don't want to come to fruition, those cannot happen unless your dollars are on the Fed's balance sheet, or said another way, that your dollars are a liability of the Federal Reserve, that your bank goes from being Wells Fargo to Jerome Powell and the FOMC. And fortunately, the good news is that is currently illegal. The Fed admits that it is illegal for them to have an account for an individual in the real economy. So as long as we make sure that they don't change that law and they don't break that law, it's going to be very difficult, if not impossible, for them to implement what is really a central bank digital currency. And there's a couple other components that would be necessary, but I'll just stop right there.
Because you've gone over the head of most people right now, including mine. I like pictures. Like what you have here is what's going on. You have here, this is your savings.
Yes.
Your asset. So you have $1 million or 100,000. That's your asset. But the moment you put it in the bank, it becomes the bank's liability.
Right. Yeah, I'm just looking at that paper.
Banks,
exactly right.
The banksters have to then take your money and they have to buy another type of asset to make sure they can pay you the interest on your savings here. And what happened with Silicon Valley Bank, what they put their money into is all these debts and all these things. And the bank's assets went bad. And that's when the runs of the banks start. People want their savings back.
That's correct.
And that's what we're in serious, serious trouble right now. And then when you talk about Orwellian, George Orwell wrote 1984. And what 1984 is, Big Brother is watching. And the big concern with Fed now, the Fed coin, the central bank digital currency, CBDC, is that we lose our privacy. That they'll track us. They'll track every move because they'll know everything we're spending money on, what we spend it on, who we give it to, and all this. So it becomes George Orwell's 1984. Big Brother will watch you via our money. And that's the problem with central bank CBDC, central bank digital currency, or the Fed coin.
Yeah, that's one of the many problems, Robert.
Yeah, but people like me panic. I said, oh my God, they're going to track me. I don't want them to know when I'm spending my money. It's none of their business. But now with, blockchain and all this, they can track anything they want. So our privacy goes, and that's why it's when George Gammon says Orwellian, he's talking about 1984, Big Brother's going to watch you. That's where we're at.
Yeah, and it just goes back to that common phrase that we heard so much during 2020 and 2021, that people often in a crisis situation are willing to sacrifice their freedom for the perception of safety and security. And so you were talking.
Hold on. The perception of freedom and security.
That's a very important word.
Yeah, because as we're talking today, people are finally waking up to what Gerald Celente says. The banksters, what bank is safe right now? And we have things like the FDIC, Federal Deposit Insurance Corporation, that's supposed to protect you up to $250,000. So if you have $250,000 of your savings, supposedly the FDIC will protect you. But what happened was Silicon Valley Bank, it was in the billions over here. And that's when Jerome Powell, the Fed, and the FDIC got together and said, we have to bail these guys out.
Yeah.
And that's called the moral hazard there. The moral hazard is that's the end of capitalism. How do you bail out the rich? And a lot of those rich guys are the Silicon Valley guys that took down Trump, in my opinion. I can't prove that. But this whole thing is, the scientific term is one big effing mess.
Yeah, and you can see that. Oh, go ahead.
The trust has gone out.
But that's the opportunity for the central planners and the authoritarians, right. Robert.
Right.
You see, you have this banking crisis.
But hang on. When George says central planners, he's talking about Marxism, central bank. And that's what, our founding fathers, that was Thomas Jefferson. He says, we got to stay away from that one. Because, if we go to a central bank, he said, our children will wake up homeless. And look at homelessness today is going through the roof. This stuff has been going on since the 1700s. And it's what George is talking about is now happening now. And everybody can sort of see it. And that's why the FDIC are panicking, because if you have like $250,000, let's say you have $1 million, does that mean you only get $750,000 back if you lose everything? Or is the FDIC, the Federal Deposit Insurance Corporation, going to bail out your $1 million too? And that's the uncertainty, because money is confidence, and our confidence is gone today.
Yeah, very well said. And I'd like to point out that the FDIC, they don't have that much in their coffers. Let's say they've got at the most 200 billion, probably a lot less now with Silicon Valley Bank and Signature. But let's keep in mind for the viewers and listeners that there's roughly $18 trillion in deposits in the United States. So that math doesn't work when the FDIC only has 200 billion.
And George, can we step back to Jeff Snyder? He talks about the euro dollar. The euro dollar means European dollar. It's dollars outside of America, which are then creating more money outside of America.
Right.
There's trillions of euro dollars as well as U.S. dollars. This thing's a big mess. It's like the big house of cards is set to come down.
Yeah, and again, that's my concern, that the central planners, the Marxists, if you will, are going to leverage that crisis situation. Their motto is, you never let a good crisis go to waste.
Correct.
So if we continue to see problems in the banking system that exceed the FDIC's ability to patch up the holes, then of course they come in on their white horse saying, well, we've got the solution. All you have to do is take your dollars from these unsafe commercial banks and just move them to the safest bank in the world, which is the Federal Reserve, which is the central bank. And people see that as, that little bit, that perceived security and safety, they give up their freedom. But what they don't realize is they're doing a deal with the devil.
I went to military school. We don't say it so politely. It says it's time to bend over and pick up the soap. You know what I mean? You don't know where it's going to come from anymore.
Right.
Because the cash is trash right now. And Rich Dad Poor Dad says savers are losers. The rich don't work for money and all these things. And we had this big 3-day here in Scottsdale. And we were talking about how the entrepreneurs like me, I stay out of paper, anything that's printed. So, took a company public. I own the paper. I mean, the IPO produces the shares, but I own the shares. I don't want to buy somebody else's shares with somebody else's company, because that's what another term is called counterparty risk.
That's right.
It's in control of somebody else, not me. It kind of bugs me. So when George went up, George was at our 3-day and he went into inverse yield curves. A couple of minds shifted gears. What the hell is he talking about? And George very simply says, we're into it right now. It's not tomorrow. It's not maybe. It's right now.
What do you think of George's concerns of a potential crisis in the financial system? Do you think about the risks around moving money to the Federal Reserve for perceived safety? Let us know in the comments. Thanks for watching.